Okay,
Yeah, Hitesh.
just a sec. Hello. Okay.
Hi, Richi. Hi, Akshata.
Hi. So I would like to invite our Vice President of the IRMA Alumni Association Executive Committee to please kickstart the session. Hitesh Sharma. Hitesh, over to you.
Thanks, Richie. I would have preferred only Hitesh Sharma. Okay. We are, after passing out, we are all on the same platform. We tried that almost all, we avoid calling everyone by sir or madam. We prefer calling people by the first name. Thanks, Akshata, for taking up this series further, which Richie has been working hard so that whatever knowledge among IRMANs, if we can share, if it can be useful to all of us, we must propagate. One thing which I believe like IRMANs have done wonderful in their careers, in their life, but somehow we have been missing links. There was one of the agenda when we initially got elected, thanks to all of you, that we would like to have more connect. And basically, like if we can help each other in improving life, including careers, that'll be the fantastic things. And the way you said, Akshata, on the lighter way side of your comment, heavy topic for Sunday evening. Yeah, I do understand, but that gives one more edge, like only the people who are serious enough about it, they'll be joining. So you got a very good target audience.
Sure.
So I'm sure like you'll be Richie will be moderating wherever required. I'm sure I'm using the word wherever required. We believe all of us are good enough to continue. Okay, thanks. And I'm sure like things will continue. Okay.
Okay. Thank you, Hitesh. Thank
Over
you.
to Akshata.
Yeah. So I would like to once again formally welcome all of you for this very exciting session on funding and valuations. And this is something that has been on the cards for a long time because a lot of IRMANs are not only entrepreneurs, but a lot of us are aspiring entrepreneurs as well. So we want to know how things move in the startup world, how we need to operate ourselves, and is there a scope? How do we check what our valuations will be? What are the processes that are followed in the startup world? And, lots of things. So, in fact, I would say that I have requested, or, we have requested at IAA, we have requested Akshata to take up certain points on the funding and valuation. But I would request you to ask whatever you want to ask under the sun so that anything and everything, howsoever you feel that this is a very minuscule kind of a query, but don't worry, just ask. You can put it on your chat box or you can unmute yourself and ask Akshata. I'm sure we will all benefit a lot from this session. So once again, welcome Akshata. Thank you for being here with us. And we are very, very hopeful that this session is going to be extremely beneficial for the IRMA Alumni Association. Thank you and over to you.
Thanks, Richie, and thanks, Hitesh, for starting over the session and creating this opportunity to share, especially about startups and fundraise. I'll start the session with a very quick background on why I voluntarily wrote to Richie that, okay, I think I can give a decent session with my personal experience. I am from batch 33, which is 2014 pass out. And my stint with startups, and particularly with today's conversation about fundraise and investments, started sometime during IRMA itself. I interned with a very, very early stage startup to found a team. I was their first intern/employee. So I was witnessing on a daily basis their first funding round, literally living with them and working with them. And they were invested by CII, which is IIMA Incubation Center, which was a pioneer at that time. They were the first ones who were seriously doing that work of nurturing founders and helping them understand fundraise and bringing them to a formal startup domain. And after IRMA, I joined CII. I worked there for 2.5 years, primarily looking at agri investments, impact investments, which was a great combination coming from IRMA and going to the investment space, but then doing in this space itself. So next 2.5 years, it was running 2-3 accelerators, training, teaching first-time founders on the tricks and trades, or preparing them with the tools of investments itself. So post that, again, I worked with a startup in Bangalore, which was VC funded by, it was an Omnivore funded company, and with the founders we could work and be a part of board meetings as well. All this while, I married an entrepreneur who was running his own bootstrapped company. It is a startup, but then we had not formally started our fundraise process. And 4 years ago, I came in full time as an entrepreneur in the company of my husband, and took over the formal process of fundraise. We bootstrapped for 5 years, and then we started with a small angel round and then a seed round. And we have completed a seed round, and we will be very soon going to the next funding round. So I am giving you enough confidence that feel free to ask any part of a question in this whole series of thinking of starting a company till Series A, before Series A is, until where I can hands-on give you a decent idea on what actually happens in reality in the name of fundraise and startup. Yeah.
So I am really sorry that I forgot to introduce you. Please allow me 1 second and I will just...
I did my part, not a problem.
Okay. All right. So yeah, I would still like to say this, that Akshata is from PRM 33 and she is the founder of Pixuate, a deep tech startup based in Bangalore. And like she has mentioned, they've raised seed round from Angel Network, Incubation Center and micro funds. And she's also got project financing from BST Government of India and multiple grants. She has worked at CIIE.co, IIMA's Incubation Center for Startup Investments. And thus, she is one of the right candidates who is going to be very, very valuable in sharing her experience on this topic. So over to you again, Akshata. Thank you.
Yeah, thanks, Ruchi. Thanks. All right, so I will start the session. I have a very short presentation just as a reference point for us to start talking. And I can either start with questions anytime in between, or I can quickly finish over in 15 minutes and go back to going into the details, topics in detail, wherever required, wherever the majority interest is. So I named today's session as the science and art of fundraise, because it is a lot of process and more amount of intuition and emotion as well in terms of fundraise, or startup investments as we call. So I am trying to cover here that, okay, why investment, who would qualify to take this investment, not in terms of process, but then in terms of, is it right? Why should you do it? And why do you not have to do it at all? And then what are the options do you have when you're actually looking at investments? What are the alternate options as well, where you do not have to dilute your equity, but still have some quality financing options for your company at that point? And then what are all the repertoire you should have when you're actually starting the process, the preparation that is needed, where invariably you will at any point of time, you will be asked these documents or information from your side. And then the real part of it, that once an investor is interested or an investor group is interested, how do you negotiate? What are the key terms? Where should you not lose out as a startup? And what should you really protect for your company? And then how do you continue to do this? Because it's a process. Once you're in it, you will continue to do it probably every 2 years, 3 years, or more often also. So yeah, this is a complicated chart. But before this, quickly, in terms of investment here, if we look at equity investment, it means that you have probably started your company and it should be in a private limited capacity, which means that there will be multiple shareholders provision to come in as a who can buy shares of your company and invest for the growth of the company. So if you're a proprietor or an LLP or thinking of starting a company, you need not start from private limited company from day one if you know that next 2 years or 3 years, you're definitely not raising equity investment. It is highly subjective, highly subjective in terms of what is the right way. Again, a lot of right advice will help you to take that journey properly. So you should be a private limited company to think of equity investment. And then the formal process of you being a full-time founder, I think it's important before like even starting to give your energy and time towards fundraise, because that's the reality. Unless it's like a superstar serial entrepreneur where you get funding before you have a funding commitment by the time you start your second company. You are ideally, the next conversation is for the group of people who are ideally like started the company full time. You're already in it with some part of your money, with your idea in place, and you have set up a private limited company. That is where external investors are prepared to come in. One founder, two co-founder, multiple founders, again, highly subjective. A lot of cases where a single founder raises investment, but then this for say at least a matter of 6 months is a full-time job, or 50 to 70% of your daily work. It consumes energy. On the other side, thinking about fundraise, where investors are asking you a question, for example, what's your next 3-year plan? What's your 5-year plan? How much do you spend? What's your gross? I'll come to all the details next. Is actually helping you build your business plan. Think deeper and deeper about what really are you doing, how really you want to grow it, and how much money you need to grow it and spend, right? So I think it's strategic, extremely strategic, that this process is towards strengthening your own strategic point of view of the company, but it consumes time. So starting with the first stage, right? So assuming your first sources of finance, they call it friends, family, fools, FFF. You have your saving, you work for some time, you have your saving, you're putting that to start your first month of salary, or not taking that first 1 or 2 years of salary, or you're funding that way. Or you have to do your first 5 travels to your pilot customers, you have to do a free pilot, you have to do a lot of office setup or CA, CS, all these statutory compliances, you're funding that. Primarily, the best way to do all of these is your first network. It could be some early believers, if not friend, family, fools, or you yourself or your own family. Many times, like we have also heard, and we also believe in it, that if you're not able to convince, say, your own family, your own parents, your own husband, wife, or your own best friends, or like first manager, that this is what I'm betting my own career on, and I'm taking this journey in the next 2 years, will you participate? I think that belief system will give you a lot of confidence to go outside and ask money from the outside people. So this is more in terms of how passionately you are supposed to do the fundraise as well. So first circle of people who are betting on you, and it's extremely personal. Here again, valuations are highly subjective. Depends on how much of past experience you're coming in with, how much of complementary skills your founding team has, how much of product readiness is there, or about timing of the market, or like, are you in the hot space? All of it matters. But then at this point, valuation is not too much that you should look at. You should look at your early believers. I'll come to that. What is the maximum dilution you should have and all that. So seed round is that point. Then comes angel investors. Angel investors meaning it could be individuals who are outside your first network, and they are professional investors also, who come in with as a small ticket size as 5-10 lakhs when they are part of an angel network, to going as high as, like, say 50 lakhs, a crore as well, all up to the kind of people you're meeting and finding them. I'll come to where you're finding these people as well. So there are these are the individuals. There are incubation centers. So there are like the seed round is the small money that you take. And then once you have taken the funds and built the product, ideal seed round targets or milestone is that you have your product market fit fairly sorted. Not realistic that your product market fit is perfectly done at this point. You're talking about like 1 to 5 crores of investment at this point, which is going in. Again, depends, are you a B2B enterprise product company or a service company or a B2C company, on how much of marketing branding is needed or how much of product development effort is needed, time taken to perfect the product. Based on that is where like you will be at some point with the seed round, where what investors look at is you took some money, what did you do out of it? Or what did you learn out of it? It need not always be the results that can talk, but what you learned with your mistakes and what your next plan is. If your next plan looks really strong and grand with not great results in terms of like say balance sheet, they might still bet on you for the next big money. So the next big money at that point is where you're talking about institutions, which is your VC funds. It could be the Sequoia, Star, Tiger, and 1,000 other funds that are there in India today. So this is how the typical thing which is there in textbooks, like we go back to marketing and we read like textbook concepts of 20-year-old. But then the growth cycle is not like this. It's not one value of death done, and then there's an upward curve, a little bit of the growth percentage varying. Actually, it happens like this. So I hope everyone is able to see the right side of the table chart. Okay, this is exactly how it happens. There could be exception of say 1 or 2 superstar companies or founders who get that first VC giving them like 5 million check, that go experiment with like 2-3 years of time in mind. But after that, anyways, there is this point. So we are talking about like people going close to IPO or post IPO who are not profitable yet as well in India, right? So you know the big names. So this is how it happens. So first you might take a small angel round. Let me give you a hypothetical scenario. You'll think that you'll take like about 1 crore of angel round and reach a revenue target of say 50 lakhs. Or like say you want to add 10 customers and you want to do it within the 1 year because you've divided that 1 crore as a burn across 1 year. In between, there'll be a product failure or a customer dropout, and you end up spending that 1 crore in 8 months instead of 12 months. Or you might increase your monthly burn from 20 lakhs to 25 lakhs. So you are like short of reaching your target, but you're finished with your money, right? Then comes the bootstrap phase at that point. Either you're bootstrapping or accelerating your next fundraise cycle, or looking at some other ways to finance your ongoing operations or like the speed at which you want to keep going. So that is where there'll be a lot of things that will be going up and down post seed round. There'll be some bridge, there'll be some seed extension, there might be some debt options coming in, grants coming in, company itself going into the service mode from the product mode for that time to make sure that they're reaching that milestone. So it is a non-linear cycle, and every time there's a big funding round, it looks extremely good because you're getting a lot of PR, you're on your story, you're on a lot of probably third page of Mint. That helps you get a lot of customer interest. It's right time to hire people also because you have done that good PR, it helps. And you have like a grand plan that, okay, I'm all in, like fully energetic, but you have to look at how further you can go with that fuel. So any questions here where you want me to go deeper in terms of the cycles of financing? Because there's a lot of misconception that, okay, I'll go raise my first money from a VC. Doesn't happen all the time. So it's important to know that there are various stages, and the journey towards VC is probably an incubation, seed round, individual angel rounds, angel network rounds, or a micro VC, and then probably go to a VC. Okay, so I have put in my own analysis here. This is not those were standard referred from the sources which I've mentioned, but here this is how it would look. So self-funded or friends, family funded round and angel round will be anywhere something like say 50 lakhs to 1 crore. Ideal way is not to dilute more than 10% at this point, because you have a long journey and a lot of investment plans, like new investments that you have to take up, and you wouldn't have had a great valuation at this point. So that is where you should try to keep below 10%, whatever money it is. Again, valuation meaning, what is valuation of the company? How big your pie is? Is it like the value of the company is 10 crores or 20 crores, 30 crores, 5 crores? Depending on that, that is your valuation. First seed round to micro VC, it's completely the way interpretation or what you think and what investor think. Okay, so for example, if you have like a 2-founder team, just out of college or just with 2-3 years of experience, and they are starting a company with a product idea, probably it is in the range of 5 to 10 crores. Again, depending on hot sector and non-hot sector. Then like this is the, like you have to be realistic that, okay, this is how much it is. Sometimes, like say post-COVID, it went unrealistic. It's like the tech employee salaries. There'll always be a market correction. So there'll always be a realistic valuations coming back, and only very small time where it goes really unreal, and there could be very high valuation as well. But correction always happens. So this is where first round, like seed round, if we limit it by 10%, next until you go to VC, you're diluting another 10-20%. If you're taking say angel round or a micro VC round as well, somewhere between 10 to 20%. Again, it could be the fundraise here, it could be in the range of 50 lakhs to a 5 crore thing. Again, 5 crore is what I'm saying is VCs usually commit 1 to 2 million ticket size. Larger VCs look at least 2 million. If you're not ready to absorb 2 million funding, they will say come later. So again, not a good idea to go talk to them at that point also, because they all, one side, they want to observe you or keep talking to you over a period of say a year or two or shorter period. But any wrong impression, they might just not give you a second chance. So make sure that if you want to start the conversation early, also you're like very well prepared on how you're articulating that in next 1 year, 2 year, I'm going to do that. And if you're hitting those milestones, that's when you go back and talk to the VCs again. So until then, micro VCs usually do like a 500K, 100K, 200K, 500K. These are the typical check sizes of like say someone working in the micro VC structure, but putting smaller check sizes. So that is how it happens. And then VCs come in where you're raising anywhere above $1 million. So at this point, if you've not diluted, by the time you have gone to Series A, if the dilution is not more than 30-35%, the company is looking very good. And you've already had a very good product market fit. There is a sector where you're growing. If that can be that is already demonstrated, you are looking at a healthy, very healthy valuation in upwards of say 10x, 15x. Again, depends on sector and the time. Any questions? Yeah. So this is my interpretation of how fundraise process is. It becomes an extremely process or a method approach. Once you have like started testing, you know what happens, who are the people at what point you want to talk to. It works like a sales funnel. You become, the first thing is that if you're completely unaware of where to begin with, best way is to see what sector, like what's your product, what's your sector. And there are so many accelerators or incubators who are supporting even sector level or sometimes generic. For example, for our space in terms of social enterprises, Will Grow is the leader. They run so many accelerators through a lot of partners, including IRMA Incubation Center, which has recently started a program. So if you're in the agri space, if you're in the financial impact space or any other social enterprise space, best way to get in there, unless you're too ahead in the game that you don't want to spend that 2-3 months in an accelerator. But accelerators are a great place to network. So you know how coveted getting into a Y Combinator is. It is because you're starting with your journey with a lot of ecosystem. It's like how we get into an institute like IRMA, and then I know that, okay, my journey of like next, my career path, I have this network effect always coming along with me. So once you're with the accelerator, they teach you how to prepare your pitch deck, how to pitch, what to prepare, what are the terms of investment, all of it. Valuation wise, again, go to an accelerator where there is a very earnest team. We were very passionate. Like I told you, I was working at CII, and we highly regarded founders' time, their passion, energy, and we did everything to support them. It is about supporting. It takes a village to raise a child. It takes a lot more to raise a startup in the early stages. So if you have a very good anchor accelerator, especially a portfolio manager or a investment manager at that place, they know the tricks and trade in investments, and they're always ready to help you know what to do at what point. You should have a sounding board if you're very serious about learning the fundraise process. Very good to have a sounding board to get like your valuation verified, your investment terms verified. Is it the right investor or not? Have your trusted ecosystem there. It helps. So say, for example, once you're part of the accelerator, they do a demo day, they invite investors because you're their product. They have to sell you as a successful startup for them to grow. So they will do that as well. So that is where when you're going through the investment, your PR is a lot more than say being underground and only working on your product or doing sales. It's the fancier world. So it gives you a lot of visibility. Do not get carried away. That's all. So once you're there, you will start talking to investors one by one, and getting those meetings will not be a problem. Again, in investor, say you are mapping and you're writing a cold email, doesn't get a great response, at least not in India. So very important to have the references or someone else writing that, okay, hey, this is my company or company we are supporting, and they're doing this or they're doing a fundraise, and you want to talk to them or what. 99% we get a meeting at that time. Otherwise, very difficult. Even if they come, the analyst comes. I'll just give you a hierarchy of the investors as well, so that I don't miss out later. So when you talk about a VC, the top of the decision-making sector space is your partners, right? So partners decide. They have an investment committee. So when you talk about a VC fund, when we talk about a fund, or even like micro fund or an accelerators, incubators, they ideally have a investment committee where the lead investment manager puts across a thesis or a case saying that this is the company we have evaluated for last 2 months, 3 months. They go through their own processes. And this is my reason that we should invest in this company at this valuation. So the investment committee finally gives the approval for investment, and then happens. So at that point, partners are the one who are really taking the decision. But partners are not meeting all companies, or at least not the first time. So below partners, you have your say VPs or senior investment managers, and then you have a lot of analysts. Analysts' time is extremely easy to get, but analysts are talking to you for multiple reasons. Not only because they are interested to invest in your company, but also they're doing their homework or competitor study or due diligence or simple sector mapping. So at that time, they'll come and talk to you. You will feel that they are highly interested, but it might be just part of their process. So you have to talk to the right people in the VC circle or the investment hierarchy. And if you get hold of partners and a partner is betting on you, you are very close to getting a commitment from that investor. Otherwise, at analyst stage, again, these are like people with 2 or 3 year experience, non-entrepreneurs. They may not get it always. And if you are not like great, if you're not doing a great pitch, which can convince anybody in this world, which doesn't happen, say, especially like my sector is like AI, computer vision, and deep tech, core B2B space. Hardly most of the world knows what are the problems. So it's very difficult for them to know in a 15-minute pitch what exactly we are building and what big problem we are solving. So they might miss the bus. Nothing on the entrepreneur. So we have heard so many stories about like Airbnb guy saving the rejection emails of VCs. They miss the bus. Yesterday, I read about Canva co-founder. I did this presentation in Canva. So Canva co-founder saying that 100 VCs passed off that investment. So today, everybody is vying to acquire that company. So they just missed the bus, and they also know about it. They don't feel bad too much about it. It's a bet that they're taking, and that's how the game is. So as entrepreneurs, we know what our game is. That's why I am sitting on this sales funnel. That you keep talking, you keep talking, you keep talking. You know how sales works. I also did B2B sales. So it is about like, okay, you talk to 100 people, some stream downstream, some fall off also, even during due diligence stage. But then finally, if you're targeting 5 crores, 10 crores, 1 crore, you have to keep doing it until your round is closed. Okay. So one more important thing is, say again, you will define a round size. So I don't know if I have mentioned in the next slide or something. I'll cover it here. So you define a round size. So you have to know what is the valuation at which you're raising, a range of valuation. It can go 10-20% higher or lower, and how much money you want to raise for that. Say you're having a target of 5 crores and you're doing a seed round. So in that, you have to find that first believer, and that's the most important thing. If you're a part of accelerator and you win, usually accelerator, they say that I'll choose 2 or 3 companies out of the 10 companies we are supporting and give a lot of other introductions. You might find that first believer who will say, I'll give you a 1 crore check. So once you find that lead investor, then you go to 100 other investors saying that that investor is putting 1 crore off my 5 crore round, how much is open still? And then this is much easier way. This gets easier than if you don't have an anchor investor. Every time you're finding that anchor investor. So that is how you have to understand. You're finding your first believer, then the rest of the round over time can close. You can take that next 6 months, 2 months, 3 months, 6 months, 1 year also. But the first one, until the first one comes, the others, there are even some funds who say that I will not be a lead investor itself. I'll only do follow. So it is important to understand what's the quality of a lead investor. Who are those people? Most likely people who are like sharp focus in terms of your space, your sector, will get you the most, will be the first believer. Or like large investors like YC or Sequoia, that they invest in all sectors and they have a lot of investments happening in a year. So that is where they might be the first bet. But then that's how it happens. And then as you keep adding more and more people, you'll see that the next 50 lakh or a crore check comes more easily. And the round, you know that you will be able to close the round if you've had this. If you've crossed over this, you know that your funding round will get closed if you're at it. And this lead investor defines your valuation. After that, for that round, your valuation does not change. And it is also important what terms what rights you're giving to this investor, the whole agreement part. Whatever you define here, most likely it gets passed on. And they might add a little bit, or you have a reason to hold your ground saying that, no, I have not given to that investor, I cannot give to you because it's the same round as well. So this is important, the lead investor part and what you're giving to them and who is it. And this process again starts repeating, say, once you run out of money or you hit your next milestone, if at all, 2 reasons, right? So you will keep going back to the investors. Is either you're continuing to burn, which also happens again a lot because of the business models. It need not be that, okay, it's not always right and wrong that, okay, if you're burning, there's something. It is based on the business model. Are you a core tech product, then you're investing a lot more in the product. If you're in B2C, you're investing a lot more in building that brand. And only after an economies of scale is where it's profitable. Until then, you have to continue to burn. So depending on the business model, you will go back whenever you're continuing to burn to finance your burn, you'll have to go back to investors. Or if you want to grow faster, so you want to reach your milestones in 1 year instead of 2 years or 3 years, and you need more fuel there. So that time you will go back. So once you finish this round, you go back, finish your milestones, reach some targets. Again, you have like another strong business plan, accelerated business plan. Again, you go back, again, you start this process. It may not always be very easy, or like life is not always rosy that once you got one good VC, they'll come back and invest again. Yes, it is a great option. If you're doing very well, everybody wants to bet a winning horse. But if you take more time, if your numbers are not looking so great, they wait and watch. They'll tell that I bet you last, I was the first one to bet on you last time. This time find a new investor to bet on you. Then I'll do a follow-up. Find a new believer, because I have been watching and I have some concerns. Again, you have to go back. Again, you have to start selling. Again, you're a new entrepreneur out in the market, trying to convince a new investor at that time. Then maybe the existing ones might come in and join there. So that is the reason it is always going to be ups and downs, and oh my God, situations will keep coming. It could be COVID, right? Which can just completely change all your plans as well. Is there a question that I should take?
Yeah, so as far as the accelerator is concerned, we have one or two questions here. The first one says, is there a criteria for participating in an accelerator program or join an accelerator?
Yes, it will be there. The first thing you'll have to do is if you find an accelerator. For example, you are running a social venture and IRMA IC just opened an accelerator program 3 months ago. And all accelerators usually have a web page at least, or a contact form, right? It will mention the eligibility criteria. For example, you should be a startup, registered startup. Some are open to that, okay, if you have an idea also, right? They'll say that you should be revenue only. They'll say that only these sectors I'm open to, right? No harm in applying also. You know that your chances are very good. If you're like meeting all the criteria, then your chances are very good to be a part of that accelerator. So yes, the first thing I would do, not to lose anybody's effort and time, go look at the qualifiers. And now that I'm here in the other source of financing, there's a lot of competitions, grants, a lot of things happening. This is the best time, especially in India, when you look at ecosystem support. So there, what I also, a small hack that I do is, one is go through the selection process. Second, find the alumni company or a portfolio company and see who are the people. Do I know anyone there? And call up and really understand what happens there in that 2 months, 3 months process, or being a part of their ecosystem. If someone gives me a confidence that yes, it's worth it giving that small time, because you're doing 100 things, like I and Tichi both confess that we both are working today, right? You're doing that 100 things. You don't mind doing 101 thing. If it's somewhere coming back and helping the whole thing, right? So you don't mind giving that extra time, but is it really worth it? You can always qualify by talking to the people who were part of that process. Third thing I do is I call up the program managers itself, saying that I do this. Dekha maine, I saw that you're running a program. What is the process? You might get a little more insight. It has always been a democratic process, be it any government fund or program or competition also that I've applied. But still good to get all the information so that you're giving your best to be a part of that accelerator program. So that's how it is. It goes from program to program, and do look at the eligibility criteria, and looking at the portfolio companies, you know what are the kind of companies they are also looking to get in their program. Ideally, charges is important. I think someone's asking, how do we find accelerators, and also what would be the ideal charges spent? Where do we find it? I have a whole list. Let me start with that itself, right? So this is both in terms of accelerator or starting your journey to be a part of the startup ecosystem or fundraise ecosystem, I'll say, because startup, I wouldn't qualify startup only if they are raising investments, because the real work is selling and finding a customer is the most important thing. No doubts about it, or no fooling around about it, whatever financing or fundraise we are doing. So there is a portal called Startup India portal, for example. If you go there and if you go to active programs there, if you can check every week, every month, if you're like really actively doing these programs, fundraise process, 80-90% of all the programs running in India are usually listed there. Okay, so you have something like, say, METI Startup Hub. METI is your Ministry of IT Electronics, right? So they have a very, very active startup support program. I myself have been a beneficiary of 3 different programs, right? So during COVID, they ran the program. So why I got into the grants and competition is because we had, like I told you, we had bootstrapped for 5 years. We were doing some decent business to fund our operations and grow at a scale, because we were yet to get to that product market fit. So even though I know how to raise funds, but I knew time was not right for our company also. So we were bootstrapping, we were able to, and building a product or finding that right fit. So we were about to get 2 large projects to make sure that the next year is smooth, or next 2 quarters visibility we had, which is a good situation to be in. And because of COVID, last week of March, the deals fell apart. And it was like, okay, you're sitting in March, there's no new project in April, because that end of year project didn't get signed off. So I just opened and started looking at the number of programs that are supporting during COVID. It could be COVID related product. Somehow we were also building a product related to COVID. So that time is where even Technology Development Board, I'll specifically mention Technology Development Board, because that's a lesser known, less fancy startup support ecosystem, but it's very, very good. So we went through a METI Startup Hub program. We went through a Startup Karnataka program. Both places we got grant. And Technology Development Board, we got project financing at 5% interest. So that's where, like, you have Startup India portal. There's something called STPI Entrepreneur Park. There also they keep running program. Currently they're running a mining innovation challenge, all the problem statements. Again, a lot of sustainability related problem statements also there. CSR, sustainability related problem statements. Technology Development Board is a body which is under DST, and they finance innovation projects. You can go there. It's applicable if you have like a tech product under development, and they finance 50% of the project. So good amount of money, anywhere up to say 10 crores. Even like larger companies like Grasim also go there and take like bigger amounts. But then even in early stages of startup, anywhere from 1 crore to 10 crores is what is the kind of debt financing. 1 to 2 year moratorium period, then 5 years of repayment time at 5% interest is very good option to support your investment as well. You're not losing equity, and then the cost of financing is not too high. So Tech TDB gives you that kind of option. I think BIRAC will be very well known if you're in the agri and impact space, because BIRAC runs biotech and agri related grant programs. Something like 50 lakhs, up to 50 lakhs is what they give as grant, and they keep running these programs 2-3 times a year. There is Atal Innovation Mission, again Government of India backed. IDEX is a defense startup program. T-Hub is like Telangana, you have a lot of startup programs. Karnataka Startup Cell is extremely active. Every year they run a grant program called Elevate. Select 100 companies, give grant anywhere from 10 lakhs to 50 lakhs. So I'm aware Maharashtra Startup Program also gives that kind of grants. So look at your state, because their eligibility criteria is you should be incorporated in that state. So wherever you're incorporated, check, because everybody has a mandate right now, state governments, central government. You hear the Prime Minister, all the key ministers always talking about like startup mein kiya, wo kiya, in all the key functions. Somewhere it's trickling down. Good amount of support programs in terms of funding is coming. I also believe that any program where there's no cash incentive and they are asking money to be a part of it, take caution. There are a lot of programs like that you be a part of it and you have to pay 50,000 rupees or something. I would say there are better options, like especially if we are already from the IRMA community, there's enough network that you can get in somewhere else. Why spend that money there, right? So usually incubators, accelerators shouldn't be charging. Again, be extremely cautious about that initial mentor equity. That they'll say that I'll help you know all this. Again, everything that I'm telling is already available on YouTube, some very good resources. where they go deep and help you understand everything, especially in Indian context as well. So again, do not give up too much of high equity at this point. Like I am aware incubators asking about as high as like 5% mentor equity before your first financing round, and they do not commit. So it's okay. Somebody mentoring you, giving that high quality advice at this point is always valuable, and you cannot pay them at this point. Understood? If it is milestone linked, negotiate such that it's revenue linked or like commit on commitment. Right. So we go through angel network platforms. Most angel network platforms charge you anywhere from 2 to 5%. But then everything is when the money hits your account, you have to pay. Not before that. Try not to get through any program where you have to pay upfront without any commitment from their side. Otherwise, there are such things that happen 1%, 2%, 3%, nothing more than 5% goes without any financial transactions. And there are so many high quality programs and incubators where everything is there to truly support a startup without a cost burden on the startup. Incubators, CII, IIMA Incubation Center, leader there, Will Grow Foundation leader in social enterprise space. There's IIT Mumbai Incubator. Every academic institution today has an accelerator program or an incubator. Some are new, some are old, established. Look at their portfolio, look at their body of work, and choose the best one where you get the most network, because these are like a good brand to be associated with. Also choose what you like. I am very happy finally Irma is like finally there is a very, very serious effort. I met the people running there a few months ago, and truly happy that the leader in rural space is starting entrepreneurship program as well. So grant competition can give you healthy fund infusion along with seed round. Venture debts are also an option, debt plus equity financing. And then bank loans are also a good option. Actually, all banks ask for collateral. Very difficult to qualify there. I'll leave it. I think a lot of other admins know much better about this, but there is a scheme called CGTMSC where they are supposed to give finance without collateral. Try your luck, I would say. Any questions at this point? Okay. I think I have added the grant programs. Keep looking at the Startup India program. How you apply is there will be always an application form. 50-60% of it will remain common as you keep applying to these programs. So you know what your value proposition is, market is, product is, team details. You can even have a template so that you do not spend too much time or dedicated time on this. But after application, it goes through selection process, presentation, all of it. But the only risk I see with grants or these competitions is they are not time bound. They are hardly time bound. When you go outside India, they have like specific timelines, like this date you get your result, this date you get your money. Doesn't happen in most of the programs we participated in. You have to wait a long time. So do not put your plan, spending plan, expenditure plan linked to that. It's a very good money, good quality money at this point of the company. But then keep backup options. When you get it, use it for that project at that time. Again, not a great idea if you're like creating a business model, creating a product, or creating a company just to access the loans. It gets more painful because you have to do it. You have to show milestones because they're always in tranches also. Even if you get, say, 1 crore of grant, free money, as a lot of people say, if it is helping your mission, everybody is benefiting, because you also have to be mindful that somebody is actually giving you a grant, right, to support the startup, not asking you back that money. But if it's you're building a product, it means 5 crores of investment. You're getting 3 crores as investment, another 1 crore as your revenue, another 1 crore is financed through these grants. Very good. Do not again create a new line of business because it gets expensive, because getting grant, the effort and pain you do in accessing this is also significant. You have to give a lot of reports, due diligence happens. Then the time delay, all of that factored in. If it's part of your ongoing plan, it helps, but it's not time bound. Okay. Again, when you're doing a formal process of investment, equity investment from investors, what are like the costs involved in it? One is the significant time from at least one of the founder, and important discussions of investors. Both the founders or all the key people have to give time, but it will not be too much. But one person will have to go through the whole process because they'll do due diligence and all that. So many times, if you're raising above upwards of $1 million, you can take help of investment bankers. There are a lot of investment bankers. Again, do your qualification. Many claim, but all again, investment bankers who work on success fee are the right bet, because that's the norm in the market. You pay them after they successfully help you close the deal or close the round, and you get the money in your bank, and then you pay that percentage of the success. Some people work on fixed, but when it comes to fixed, it will not be too much. Then the percentage. So investment bankers work on percentage of the funding amount, 2 to 5%, and that will be after success. So you can go through that, or if you're aware, you're already part of this ecosystem, you can do it directly. So early rounds possible directly, founder talking to investors or a group of investors or incubators, and you get the money directly. Next is a platform fee. Like I said, some people charge and choose wisely. Good, okay if it is like giving you higher value, not okay if it is like too much, unreasonable, and without any commitment. Then there'll be CA work, a lot of CA work during your due diligence, post due diligence, when you're like issuing shares, preparing your cap table, financial model, ratios, etc. So a startup friendly CA will be needed, because this is you will need CA's time, and they should somewhere be at least be aware of these things, valuations and equity. Many CAs, traditional CAs, again, not too much aware. They know their work, but then it will help if you have a startup friendly CA in this space. There'll be CA's work post investment. Once money comes in, a lot of compliances, so you'll spend some there. You'll need a lawyer sometimes to negotiate on behalf of founder rights. So there'll be this work, and then some statutory fees. Just to give you an example, when you are a private limited company, before your first funding round, your shareholders will hold equity investments. Okay. So next, once the investor says that, okay, I'll put in X amount against this valuation, you have to issue some shares to them, and the investors will ask that, give me preference shares. So that time, it's the pie starts getting divided. Pie gets bigger. So your pizza is getting larger now because you have a valuation. It became bigger, and you're issuing new shares there. So there is an authorized share capital increase that is needed. So for which there'll be some fees that you have to pay to the ROC. So after that, you have to issue those shares and give a share certificate in return, against which like they are giving you that money. So there are these compliances, ROC work, where a lawyer, CS, and a CA ecosystem is also needed, who's also helping you in the other business work as well. Okay. I'll quickly touch upon here what are the things you should have with you. Pitch deck. Pitch deck is the time place your Gita document, which should be able to convey your vision. Sell, like that is the product that is going to sell, like that's the tool that is going to sell your vision, your product, your company. Pitch deck is where you have to spend a lot of time in building that story. And again, pitch deck also is a session in itself. I have put some reference links on what are the things, minimum things. There'll be different versions of pitch deck also. There'll be an elevator pitch and 7 to 10 slider, which you send out in the first email, and then you will have more information. For example, you send something in the email, they come back and say, let's take that first half an hour call. In the call, they ask, show me your cap table. Who are the current shareholders? What is the percentage they have? How much investment, when you took? Or going deeper into who are your customers, ticket size of the customer. So those things you wouldn't want to share in your first email to the investors, but then you can always have as backup slides, because that 30-minute, it's important. Again, you will have to share a lot of proprietary information, a lot of hard-earned learnings in that 30-minute. You have to open all the learnings and share it. That is one of the side effects of going through this process, that you talk and then sometimes they don't get it. And more importantly, you are sharing some good amount of proprietary information. You just have to believe that it's not getting handed over to a competitor. If you feel there's such an information, hold on. Nobody signs an NDA here. Even during due diligence time, we have struggled to get an NDA signed by the investor. But then, yeah, investors also have some sort of a holy rule that no, you shouldn't pass on that proprietary information of a startup you have found, but then you never know what happens. So, but then there's some things you will have to share, otherwise they will not do the next rounds, because you have to be open about all your plans and all of this. So apart from that pitch deck, you should be aware that what is the valuation in which you're raising and how much equity. It might be difficult to define a valuation. You don't know what investors will agree or not agree, and very difficult to decide on a valuation. What you can in return think is how big your vision is for your next year, 2 years, how much money you are looking to raise, investment fund amount target, and how much you want to dilute for that much. You don't want to give away 50% in this round for this much money, because you're also in your mind thinking how far you're going to go with this money. So target valuation range should be there. And then along with pitch deck, if say first round goes well, they will ask you for like more details. Give your competitor analysis, give your technical product more details in terms of technical details. What are your unit economics, ARPU, average revenue per user, CAC, customer acquisition cost, gross margin. They'll come back with all these details. So you should have worked out all this. This is in return, if you're clear about your business, clear about your product, it's easy. Otherwise, this is a good opportunity for us to sit down. Otherwise, there's no time as entrepreneur. You're running, so you don't have time to consolidate information, plan, strategize. So good to put all these on paper, because they have to go on paper to the investor. Because again, like I said, hierarchy, somebody who might know everything, but end of the day, they have to present to their board or investment committee to get that commitment from them. So all of this goes in terms of documents. So pitch deck, financial model, projection model, at least 3-year projection, 5-year projection, with all your ratios, expenditure plan, end-to-end expenditure plan, revenue plan, all of it has to be ready once you've like gone further the pitch deck process. A cap table, which like shareholding structure, that has to be there. All your legal compliances has to be in place. With the before that they don't invest. So things can, this is the only place which can fall apart in due diligence process. If you're not legally compliant, they might wait for some time. Once they have given commitment, they have patience. They'll wait that, okay, finish it and come, all that. Red flag in terms of you've told something and it's not true during due diligence, you've given false information, then everything will fall apart. Then your next investors also, it's very difficult. So true sales number, true sales picture, product picture is always a good way to go ahead. I think, yeah, in terms of deep diving, I'll finish with this slide. I don't know how much time it is. Sorry. Yeah, I think I've covered this. Again, term sheet is the first thing you'll get once you're committed. And term sheet will broadly define what are the rights investors are asking, what you're asking. Very important time at this point that you get a lawyer, know what your rights are, what you're giving. Very, very important. You should know what you're doing at this time. Investment amount, due diligence, and again, money can come in tranches. You have to plan your business and everything based on that. You can always negotiate. What are the milestones? How much money you want first, all of it or some of it? And this is all in negotiation process now. There's a little bit of room for you to have your way, for them to have your way, depending on again what point you're in. And in terms of investment process, there'll be a due diligence after term sheet signing. There'll be at least after 10 meetings, once the investment committee has said that, okay, put this money in this company, they'll come back with a term sheet. Once you sign it, due diligence starts, valuation certificate. There are a lot of other processes. Then the main agreement, holder agreement. Sorry. Once money is in bank, you are formally portfolio company of that investor. Then every month you're giving your MIS to the investor. Quarterly, there's an investor meeting. Otherwise, they generally do not ask too much of your time, at least initial stages. They will be mindful of your time, not interfere too much. All this, again, how good your investment document is, shareholder agreement, depending on that. And always there to open to giving you the support you need, but then again, do not bank on investors to help you with your business execution or plan or network or connects in terms of customers. You will get more benefit in terms of follow-on round financing from there, or even PR help for that matter, but do not bet too much on them. Some might help a lot in terms of your sales as well. Then there is, every time you're raising your next investment round, you have to go back and give a notice, get their approval of your existing shareholders, because there are certain affirmative rights. Meaning if you're adding a new shareholder, it is an affirmative right. You need a consent approval of like say 90%, 95% of your shareholders. Your cap table might end up, today it's become a norm that you have a lot of angel networks and all coming in. Your cap table might have like 20, 30, 50 shareholders. Some cases I've heard there are like 100 shareholders also. There's a cap of 200 shareholders up to a certain point in the company, private limited company. But then it gets complicated. You have to go back, get their permission, go next, all that, and plan your runway well. You think this money is enough for you to go through your milestones for say next 10 months, 12 months, 24 months, or more than that. Anything can happen, a little bit of plus and minus. You should know how to continue because a lot of more people's money is at stake now. Open to questions, if at all there's any time. Is there an NDA required? NDA is not a norm. If you're being a part of program, they might ask you to sign an NDA for their proprietary processes, but do not sign any exclusivity, or you can ask for an NDA probably during due diligence time. Mostly all of this still goes through without any NDA as well, even until investment process. Is it possible to raise funding as sole proprietorship? Like I said, so investment meaning you are, somebody will invest against shares. So if you say my share price is 2,000 rupees, I'll give you 100 shares, give me 2 lakh rupees, someone is giving you 2 lakh rupees in the company. So invariably you will have to issue shares to them. As a sole proprietorship, you are the single shareholder in that company. So you'll have to change your company structure to a private limited company. That's the only way it's allowed. One small point I missed, either you can do a valuation round or very early stages, you can do a convertible note or a valuation range. So you can say my floor between 10 to 20 crores. Depending on next round valuation is where we will define your at a discount. So we can do that later as well. So in terms of convertible note. I do not know what is OPC. Can you tell me what is OPC?
1% company format.
No, that might be the only option at that point.
Okay.
Nobody's asking any question. That shows, Akshata, like how people have been listening to you.
Went about
This is one of the interaction I was planning to go, and I am still sticking around. And you can see the number of participants have not gone down earlier. No, in normal talk, the peak goes and it peters down very fast.
Yeah,
You
but
could hold 33 people till the last. Wonderful.
I wanted it to be more interactive. I didn't know what.
I'm sure the people who attended, they are going to share with the other colleagues. We will, Richie will have to organize this again. I find it very, very informative and good for budding entrepreneurs.
There are many successful entrepreneurs who have raised like big rounds in our alumni network. I mean, knowledge is there. I mean, network is there. Anyone who's starting up should be able to reach out and know more. This is about knowing, right? So there's nothing scary or unknowns here. It's a process and it's important because it's about how you're defining your company, the valuations, terms, rights. If it goes wrong, it can affect your whole life decisions, but if it goes right, it can help a long way.
Yeah, that is what I initially said. Like, we have lots of information, knowledge in the IRMANs, among IRMANs. But the point is, Richie has taken the initiative of sharing that information with all the people. Like, that's wonderful. Like, and we require more and more people.
Yeah, right. Should
Yeah.
I answer? Like, there's 1, 2, they're asking like what?
Yeah, please go ahead.
Yeah,
Okay,
yeah.
I'll be just logging out now. I
Sure.
need to really go out now.
Yeah, thank you so much.
Okay.
I'll share this deck with you, Richie, and you can pass it forward. And it has the links which I've referred. Do incubators like T-Hub charge enrolling fees? I have heard that. And like I said, there are options today that you don't have to go through that. If you're doing it, it better be worth it. You can always refer like to your background checks and go ahead. T-Hub has a good brand, but I'm not directly involved, so I wouldn't be able to comment on that. Right stage, like I said, you're looking at a product, you know what you want to do with the money next, and that's the right time to do not experiment too much with equity investment because it's expensive. They'll come back, and there are 2 people to at least question. Again, great support system, investment meaning that it's a risk capital. It's not that you're bound like so basically it's a risk capital. Somebody is betting, believing on your vision. But if you're experimenting too much, see a way that you can put in your money or you can run some services, right? So yes, it takes time because anyways it's going to take time. So building a product is a longer journey. More money comes in, you burn faster. Again, you're in a more difficult situation than earlier. So if you can run a parallel service, some way to generate revenue to run a basic team, better to delay the investment until you know what exactly is the product or sector, or one thing is clear. What stage is a healthy stage to raise funds? Yeah, anything else? Otherwise we can.
Preeti had raised her hand. Preeti, you still would like to ask the question?
Yeah, hi, good evening. That was the same question I had put up in the chat box, which she has answered. Thank you so much.
Ideally, be full-time at least. Like you start doing your company on a full-time basis before going out to investment. How is the difficult part, but we have to figure it out.
Okay. Looks like we don't have too many questions. Maybe people are still thinking what all to be asked. So you all can connect to Akshata anytime. I believe she is very, very approachable and very helpful. I would like to invite Swaminathan from our executive committee team. Swami, are you there? Hey Swami, I would like to invite you to please give the vote of thanks and we'll close the session then.
Yeah, just a moment. Right, yeah. Thank you, Richie. Akshata, that was great. I think in an hour you gave participants here a wonderful comprehensive overview of, pretty much what the entire game is about. And obviously the experience you have gained over the last few years raising funds, it clearly shows. I think you have given a very clear, crystal clear view with actionable insights. I'm sure the participants here, whatever plans they'll be having, they'll definitely be making use of all this. Thank you so much.
Yeah. Thank you. Thank you.
Okay. So I would like to just conclude by thanking the IAA and the executive committee body also for facilitating this session. And once again, thank you to Akshata. Thank you, Akshata, for being so approachable and sharing all this information with us. I'm sure people will reach out to you.
Yeah, and also I think on behalf of the IA, we should say congratulations on your success. We have been reading about your success and wish you, more success in the years to come.
Yeah, sure. Thank you so much. And there's a lot. I'll be coming back to the IRMA network. Already connected to so many of them, and I think
Wonderful.
all of us are in a combined journey, right?
Wonderful. All the best to you.
Right, right. In fact, the success that you have acquired in the past few years and the information that you've shared with us today, definitely, I mean, the kind of public that we have on this forum today is a clear-cut demonstration or depiction of the fact that this is something which is very valuable to all of us here. We have some very senior IRMANs also here. So thank you everyone for participating and looking forward to more sessions. Please do reach out to us, the IAA Executive Committee. Let us know what more sessions you are looking for. Also, please volunteer for conducting similar sessions. We'll be really grateful because after all, this is our community and we are responsible for each other. Thank you so much for being here once again. Namaste.